Hi everyone, welcome back. In this session, let's continue our discussion on investment accounts where we are going to learn how to prepare the ledger account for investments. Now, like just in your basics, how you first learn the journal entries and then move on to preparation of ledger, here as well, we've learned the journal entries and we're now going to preparation of ledger of our investments. Now, when I say ledger, typically what people would obviously imagine is you would have a date, particulars, and an amount column on the debit side or the left side in a crude way, if I have to say it in a crude way, and you will have a date, particulars, and amount column on the credit side or the right side. When the left and right obviously is a very crude way of speaking, the left is actually the debit side and the right is actually the credit side. Now, this is how a typical ledger account looks like. Investment ledger is also going to be somewhat similar, but there's going to be few additional amount columns. All right, you will have the date and particulars, but you will have few additional amount columns both on the debit as well as on the credit side. Now let's quickly take a look at the format of the investment ledger account. Now, this is how the ledger account is actually going to be. You are going to have three amount columns on the debit side and three amount columns on the credit side as well. We'll slowly understand what each of the column actually represents. But before going into that, some formatting stuff that I would like to mention is whenever you're preparing a ledger account, the first sentence is supposed to represent books of X Limited, books of Mr. A Limited, books of Messrs. So and so XYZ Company Limited. All right. So the first line always denote which company's books are you actually preparing the ledger account in. And then the second row is supposed to represent the name. Sorry, the second row is supposed to represent the name of the ledger account. In this example, I'm assuming that we are purchasing investment in debentures of some company. All right. Debentures of X Limited, which means I have purchased debentures of X Limited and the coupon rate is 6%. Whatever is written ahead is the coupon rate. All right, that is the coupon rate. So 6% investment in debentures, meaning I have purchased investment in debentures of X and the coupon rate for those debentures is 6%. All right, so the name of the account is going to be 6% investment in debentures. Similarly, you will have investment in Reliance equity shares, investment in Infosys equity shares. If it is equity shares, you will not have a coupon rate which you will write ahead. But if it is a debenture, preferably always write the coupon rate ahead. All right. And then you denote DR and CR to the left and to the right. This representing debit. So this entire section is the debit side and this entire section is the credit side. Now, date and particulars are something that I do not have to obviously mention. All right, date and particulars, I'm sure you guys are very well aware of. You will write 2 on the left on the debit side and you start with buy on the credit side. Now, what are these columns representing? We have something called as nominal value. We have something called as interest, and then we have got something called as cost. All right, there are three columns: nominal value, interest, and cost. All right. Nominal value is actually not really part of your trial balance. All right. Nominal value is a memorandum column. It's a memorandum item. What do I mean by memorandum item? This is not going to form part of your trial balance. When after preparation of ledger, when you ultimately prepare a trial balance, nominal value is not going to be a part of the trial balance. The other two sections will be a part of the trial balance. Nominal value is only for information purposes. All right, it's purely for information purposes, and therefore we are calling this as a memorandum column. It's an additional information. All right, whenever you find something as memorandum items or memorandum, it's basically trying to say that this is not real part of your books of accounts. It's like additional information. All right, so let us say if I purchase 1,000 equity shares. All right, if I'm purchasing 1,000 equity shares of Reliance, let us say I am purchasing it at 80 rupees. 1,000 shares of Reliance, I am purchasing it at 80 rupees. The face value is, let us say, rupees 10. The face value is, let us say, rupees 10. The face value of equity share being 10. 1,000 shares, cost is 80, face value rupees 10. In your journal entry at the time of purchase is going to be investment in Reliance debit of 80,000 to bank account 80,000, because you're purchasing it at 80 rupees. 80 multiplied by 1,000 is 80,000, right? So your journal entry will be investments debit 80,000 to bank account 80,000. that 80,000 is going to be recorded in the cost column. All right. The 80,000 is going to be recorded in the cost column. All right. So when you have, so you write on the debit side to bank account. All right. This heading is just put by me for the sake of explanation. So you will write, since the journal entry is investment debit to bank, in the investment ledger on the debit side, you're writing to bank account and you will write 80,000 in the cost column. All right. So this is actually your true investment column. All right. Although the name of the column is cost, this is nothing but the true investment ledger. All right. This is actually the true investment ledger. In nominal value, which is like I mentioned, it is a memorandum item. You will write 1000 into 10, which is the face value. It will be equal to 10,000. All right. Nominal value will be 10,000. So you write 10,000 over here and you write 80,000 over here. All right. Again, repeating it, nominal value is not going to form part of your books of accounts. What is part of your books of accounts is actually the 80,000 that you've written in the cost column. All right. What is going to form part of your trial balance and balance sheet at a later point in time is the cost column of 80,000 rupees. Nominal value is only more for information purpose. In fact, like how you have a double entry for cost where you debited investment and credited bank, you're not going to have a double entry for nominal value. There is no credit for the nominal value. It's just a memorandum item. It's an additional column that we are preparing in the investment ledger account. Now, what does this interest column in between represent? All right, this could be interest or it could be dividend. I have written interest over here because in my example, I wrote 6% investment in debentures as the heading. Therefore, I've written interest, or it could alternatively be dividend column as well. Now, what does this column represent? Point number one, I want to clarify is this is not accrued interest. This is not the asset accrued interest. All right, the cost column actually represented the investment asset. All right, interest column is not the accrued interest column, but it is actually the interest income column. It is the interest income column, which is the P&L ledger. All right, which is a P&L ledger. It's interest income, which is actually not asset, but it's the P&L ledger. All right, therefore in the bracket I've written over here as income. All right, but whenever you actually look at solutions, you will never find the words income being written over here. You will always find just interest being written. And what that interest column actually represents is it is a P&L ledger account. All right. Now, why have we actually inserted the P&L ledger account in this in the investment ledger? The reason is because this interest is actually associated with investment, right? So it's just more, it's going to add more value when you have the interest P&L also in the same ledger account as that of the investment. This interest income that we have over here is obviously linked with the investment itself. So therefore, it's going to be more value additive when you have the interest column also along with the investment column. All right. So that is the reason we're actually having this additional column over here. So without preparing a separate ledger account for interest income, you have actually merged the interest income ledger account into the investment ledger itself. All right. But in a separate column, the investment asset is one column, which is represented by the cost. The interest income is going to be represented by a separate column, but we are not going to time and again write income. Please remember that this is actually interest P&L ledger. All right. Now, therefore, whenever, let us say, in the case of this 6% investment in debentures, if you earn interest, all right, whenever you earn interest, the entry is bank account debit to interest income. All right. So bank account debit to interest income. Therefore, on the credit side, you are writing by bank account and you will have some values written over here. All right. You will not write any values in nominal value and cost, but you will write the corresponding value in the interest P&L ledger. Same way, when you were purchasing, you would have written some value in nominal value. You may or may not write anything in the interest. I'll come to why I said may or may not. Right now, in the example that I was saying, let us say you do not have anything. Therefore, I'm writing it as not applicable. All right. Instead of not applicable, let me write it as 0, because later on we will actually see that at the time of purchase also, we will actually recognize some value in the interest column. All right. So now let us assume it is 0. All right, so when we receive interest, it's bank account debit to interest. Therefore, on the credit side, I am actually going to write by bank account. I will have some value that is being written in the interest column. How will I calculate this? I will just take the face value multiplied by the coupon rate. Remember, it is not the cost multiplied by the coupon rate. It is the face value or the nominal value multiplied by the coupon rate. That I will recognize it as part of interest income. Now remember, interest can either be paid on a semi-annual basis or it can also be paid on an annual basis. It's not necessary that interest will always be annual in nature. We can have interest either being paid on a semi-annual or it can also be paid on an annual basis. So if it is semi-annual, then this entry that this journal that you have actually recognized over here, that needs to be posted twice in a year. That needs to be done twice a year. Once say on 30th of September, another on 31st of March, assuming that they're paying semi-annual. All right, so it should be calculated also accordingly. You will have to do into 1/2 while calculating the interest income, and then you will actually recognize it twice in a year. Let's ignore the balance sheet date valuation for a second. Let's assume there is no other transaction. You will have carry forward of balance as by balance carried down. The nominal value and cost, whatever nominal value and whatever cost you had, they will be carried forward. All right, they will be carried forward to the next period, and then you will have two balance brought down on the debit side. All right, you will have two. You're basically closing the ledger account. Whatever ledger account you opened, you're closing the ledger account by recognizing by balance carried down, and you will then have two balance brought forward in the next period. The interest, which is actually a P&L ledger, that will be closed by transferring the balance to the P&L account. All right, although I've not written it over here, maybe let me just write it. The interest, which is a P&L ledger, that will be transferred to P&L account, and you will be showing it as a income in the P&L account. So you will have not applicable over here, and you will have not applicable in the cost column, but you're going to actually have value that you're writing in the interest column. All right, so what have you done? The interest income that you have that you recognized earlier, you're closing the ledger by transferring it to the P&L account. You're closing the ledger by transferring it to the P&L account, and eventually when you prepare the P&L account, you're going to show it on the credit side. You're going to show it on the revenues or the income side, and this will be shown on the balance sheet as an asset. All right, the cost column, the amount that is there in the cost column, which was 80,000 in the verbal example that I gave, that will eventually be shown on the balance sheet as an asset, and this interest will eventually be closed by transferring it to the P&L account, and it will form part of your revenues or it will form part of your income in the P&L account. All right, so that is how we actually prepare an investment ledger. Now let's take actually a very quick example to solve. So on the 1st of April, sorry. Yeah, on the 1st of April, I purchased 1st of April 2022, I purchased 1,000 debentures of Z Limited. All right, there is a company Z Limited. It has issued debentures. I have gone and purchased 1,000 debentures, and the face value of debenture is rupees 100. The face value of debenture is rupees 100. I have purchased it at a cost of 1,07,000. All right, this 1,07,000 is obviously not on a per debenture basis. It's the cost of all the debentures. 1,000 debentures, face value of each debenture is rupees 100. All right, maybe I should have just clarified, rupees 100 per debenture. Okay, and that I've purchased it at a total cost of 1,07,000. So if you actually think of it, I have purchased debentures of nominal value of 1 lakh, but the cost I paid was 1,07,000. The cost I paid was 1,07,000. Nominal value is 1 lakh. Brokerage, I've paid 2%. Now, please think whether this brokerage will be calculated on 1 lakh or the brokerage will be calculated on 1,07,000. All right. Think of it whether the brokerage will be calculated on 1 lakh or 1,07,000. I have interest being paid at 6% per annum, and it is payable on 30th September on 31st of March, which means it is a semi-annual payment. It is being paid on 30th of March, on 30th of September and 31st of March. All right. Remember, I am not going to get 6% on 30th of September and 6% on 31st of March. The 6% is a per annum coupon rate. So I will be getting 3% on 30th of September and 3% on 31st of March. Repeating myself, the 6% is an annual rate. It is a per annum rate. All right. But the interest is being paid in 2 installments. Therefore, I will receive 3% on 30th of September and another 3% I will be receiving on 31st of March. Then I've given you an additional information that the market value of this investment is rupees 1,03,000 in March 2023. I purchased the investment in April 22. 1 year has passed by. The market value of the investment is say 1,03,000. I purchased it at 1,07,000. The investment value is now 1,03,000. All right. And then in the next financial year, 30th September 2023 means we're changing a financial year. I've given information about sale. Let us ignore that for a minute. Firstly, let's prepare the ledger account for FY 22-23. First financial year 22-23. Let us actually prepare a ledger account. All right. Now, on 1st April 2022, I have purchased debentures. All right. I have purchased debentures. I have paid 1,07,000 in the form of cost and I've paid 2% as brokerage. The 2% will be calculated on 1,07,000. The 2% will be calculated on 1,07,000, which is the transaction cost. So on a totality basis, I have purchased investments for 1,09,140. All right. So in the cost column, which actually represents the investment column, I am going to actually say that I have paid 1,09,140 rupees. All right. I have actually paid 1,09,140 and I am crediting bank account. All right. I've done investment debit to bank account. I've credited 1,09,140 rupees. In the nominal value column, I will be having 1000 multiplied by 100, which is 1 lakh rupees. All right. The nominal value column, I'm going to recognize 1 lakh rupees. Interest, I will be having 0. All right. Interest, I'm going to have 0. Now, on 30th of September, as days pass by, on 30th of September, I am going to receive interest at 3%. I'm going to receive interest at 3%. Now I'll have to calculate the rupee value of it. I have to calculate the rupee value of it. Now, how will I calculate it? Will it be 1,09,140 multiplied by 3% or will it be 1 lakh multiplied by 3%? It's obviously going to be 1 lakh multiplied by 3%. Coupon is going to be calculated on the face value. Coupon is being calculated on the face value. So I am going to recognize 1 lakh multiplied by 3%, which is equal to 3,000 rupees. All right. 1 lakh multiplied by 3% is equal to 3,000 rupees. I will not recognize anything in the nominal value or the cost. All right. And why have I written this on the credit side and not on the debit side? The reason because the journal entry is bank account debit to interest income. All right. Interest income is being credited and therefore on the credit side, I've written by bank account. Next, 31st of March 2023, I am again going to receive interest, which again worth 3,000. I do not have to recalculate it. If the first installment was 3,000, the second installment is also going to be 3,000 rupees. All right. So I will be recognizing interest worth 3,000 in the second period as well. All right. Now, if you look at it, the market value I've given on 31st of March 2023 as rupees 1,03,000. All right. The investment is being shown. The investment is worth 1,03,000 as at 31st of March 2023. And this books of X Limited for FY 2022 and 2023. I earlier wrote 21-22. I've just corrected it. Okay. So the market value is actually rupees 1,03,000. Looking at the ledger, if you actually see the cost, the value of investment in my books right now is 1,09,140. The value of investment right now in the books is 1,09,140 because I initially recognized it at 109,140. After that, I did not have any other transaction. So right now, if I prepare a trial balance right now, the value of this investment will be 1,09,140. But I know that the market value is 1,03,000. Let us assume that this is a current investment. I've not written it in the question. Let us assume that it is a current investment. Even in the illustrations that we're going to do forward, nowhere it's going to be mentioned that it's a current investment, but there is a presumption that it is a current investment unless anything else is being mentioned. All right. If the question explicitly states that it is a long-term investment, then fine. Otherwise, you presume that it is actually a current investment. Okay. Now the value at which it is appearing in my books is 1,09,140. I know that the value is actually is in the market is only 1,03,000. All right. We are going to apply the principle of cost or fair value, whichever is lower. My cost is 109,140. My fair value is 1,03,000. All right. So I am going to apply cost or fair value, whichever is lower, which means my investment should appear at 1,03,000. I'm repeating myself. In the books of accounts right now, I have got an investment at 109,140. The market value is only 1,03,000 rupees. The market value is only 1,03,000 rupees. We are going to apply the principle of cost or fair value, whichever is lower, assuming that this is a current investment. All right. Now, applying that principle, we are saying that the investment should appear in the books of accounts. The investment should appear in the books of accounts at 103,000. It is appearing at 109. It should appear at 103, which means I should recognize a loss. I should bring down my investment value. It is right now at 109, 140. I have to bring it down to 103, which means I should bring down the value of investment. I should credit my investment. The debit will go to P&L account. The debit will go to loss on fair valuation, which is a P&L ledger account. All right. I'm repeating, we have the balance at 109, 140. We need to bring it down to 103. Therefore, I have to reduce my investment. Therefore, I credit investment. All right. Investment being an asset, you credit for any fall in value, right? So credit investment by 6,140. 109 minus 103, 6,140. So therefore, on 31st of March 2023, you're going to have an additional journal. You're going to have an additional journal over here, which is by loss on fair valuation account. All right. I've written it as loss on FV account, and I will be recognizing that 9140 in the cost side. All right. And nothing will be recognized in the nominal value, because is the nominal value changing? The answer is no. Nominal value was earlier also 1 lakh. The nominal value right now is also 1 lakh. What is actually changing is the carrying value. What is changing is the carrying value or the book value of the investment. Carrying value is nothing but at what amount are you carrying the investment at. All right. So we are bringing down the carrying value from 109, 140 to 103,000. Sorry, this should have been 6140. All right. 109, 140 minus 103,000. That is a loss of 6,140. I'm crediting investment, and the debit will go to loss on fair valuation, and that is an expense in the P&L. All right. Now, finally, I have buy balance carried down. All right. Buy balance carried down. I'm going to have nominal value of 1 lakh rupees. And then this will be 103,000. All right. This is going to be 103,000. Obviously, you're first supposed to take the sum and then only calculate buy balance carried down rather. Okay. So now the balance on the both debit side as well as the credit side are actually equal. All right. So this is how we are actually preparing the ledger account. All right. Just the last journal, again, I'm repeating. We are applying the principle of cost or fair value, whichever is lower. Now we know that by applying this principle, investment is supposed to appear in my books. The closing balance of investment is supposed to be 1,03,000. Right now, I have investment at 1,09,140, and therefore I'm recognizing a credit in the investment of 6,140, and I'm bringing down the final closing balance to 1,03,000, which is what my intent was. All right, by applying the principle of AS13, I wanted my investment to appear at its fair value, and by recognizing this journal, I have actually brought down my closing balance to 103,000, and then I have both the balances being tallied. All right. So and then we are also going to close down the interest income ledger. All right, we are also going to close down the interest income ledger. It had 6,000 over here. So I am going to transfer it to profit and loss account. All right, this is going to get transferred to profit and loss account. I will transfer it to P&L, and in the P&L, I will show a revenue of 6,000. Finally, in P&L, I will have a revenue of 6,000, and I'm going to have a cost on the balance sheet. I'm going to have a carrying value or the book value of investment on the balance sheet at 1,03,000 rupees. All right, not the cost. It's going to be the carrying value on the balance sheet of 1,03,000. That is how I prepare the investment ledger. Now, before we go on to the next financial year, just some ways of you having it in intuition. Investment increasing should always be on the debit side. All right, and I'm sure you obviously know it, but so that you're able to actually do it a little fast, investment increasing should always be on the debit side. Investment decreasing should always be on the credit side or the right hand side. All right, this is more for you to act fast. All right, whenever you're purchasing investment, increase, so left side. Whenever you're left side or the debit side. Whenever you're selling off an investment, it should be on the credit side because investment is going down. Whenever you have a loss on investment, like we had a loss of 6140 over here, credit side on the right hand side. All right, so left side is increases, right side is decreases. For interest, because this is a P&L ledger, it's vice versa. When you're earning something, you credit interest income. When you're reversing something or when you're transferring it to to P&L, you recognize it on the debit side. All right, so that's the intuition that I just wanted to give it to you guys so that you're able to act a little faster. Now moving on to the next financial year. Firstly, in the next financial year, on 1st April 2023, you are going to have something called as to balance brought forward. All right, you will have to balance brought forward, which is equal to 1,00,000, and then you're going nothing in interest, and then you're going to have 1,03,000. You're bringing both the nominal value and the carrying value. All right, although the name of this column is cost, what is coming over here is nothing but book value or carrying value, right? You're bringing forward both the nominal value as well as the carrying value from the previous period to the current period. Obviously, interest being a P&L ledger, you're not going to have any balance brought forward either on the debit side or on the credit side. You're not going to have any balance brought forward to either on the debit side or on the credit side with regard to interest. All right, whatever interest was there last year, it got transferred to P&L, and P&L got transferred to shareholders funds. You do not carry forward interest again separately. All right, so you have balance brought forward of 1 lakh and 1,03,000. Let us say the entire investment is sold on 30th of September for rupees 1,06,000. The entire investment has been sold for 1,06,000 and brokerage of 3% has been charged. We are having a brokerage of 3%. Okay, now investment has been sold on 30th September. But on 30th September, we would have also received interest. All right, we would have also received interest on 30th September. The question is not going to tell you that we have received interest. Obviously, when you're selling it on 30th of September 23, it is presumed that you have collected interest and you have then actually sold the investment. So first, you're actually going to collect interest. All right, how much interest are you going to collect? You do not have to recalculate. It's going to be 3,000. All right, you do not obviously have to recalculate. It's going to be 1 lakh. It's going to be 1 lakh multiplied by 3%, which is equal to 3,000. Now, after we receive the interest, we are actually selling off the investment on 30th of September on the same day for rupees 1,06,000, where brokerage is 3%. All right, the brokerage is 3%, which means I have received 1,06,000. Am I also going to receive the brokerage of 3%? The answer is no. Brokerage is a cost for me. I'm going to pay 3% of 1,06,000. I will be paying 3% of 1,06,000, and the net amount or the net sales proceeds that I'm actually having is 102,820. All right, it's 102,820. If you think of it, in my books, I had an investment whose value was 1,03,000. Remember, in my books, the value of the investment on September 2023 is 1,03,000. I am selling it for 102,820. The net sales proceeds are 102,820. The book value is 1,03,000. Sales proceeds is 102,820. Therefore, my loss on sale of investment will be 102 minus 103, which is equal to 180 rupees. All right. I have the book value of investment is 1,03,000. Sales proceeds net basis is 102,820. Therefore, I've got a loss on sale of investment. This is exactly how you used to calculate profit or loss on sale of fixed assets, right? You have book value, you have sale proceeds, compare them, that is the profit or loss on sale of fixed asset. Same way you are having profit or loss on sale of investment. Now the journal entry that we actually learned for this is I debit bank. I have a cash inflow of 102,820. All right. I debit bank by 102,820. I credit investment with the book value. All right. Remember, this investment is actually the credit is actually equal to the book value. The differential is a balancing figure. I either can have a loss or I can have a profit. If this would have been sold for 105, then it would have been a profit. It was sold for 102, therefore I've got a loss of 180 rupees, which is more a balancing figure. All right. This is a balancing figure. BF does not mean brought forward. It is a balancing figure, and 102,820 is actually the sale proceeds. This was how I actually told you the journal entry. All right. But when we are preparing the ledger, we actually record it in a slightly different way. Let me actually break this journal entry down into two. I'm breaking this journal entry down into two. First, I'm saying let us do bank account debit to investment. All right, let us do bank account debit to investment to the tune of sales proceeds. All right, I am not looking at the cost or anything. Let us do it to the tune of sales proceeds. Okay, then in the second journal, I am saying let us calculate. Earlier I said this 180 is sort of a balancing figure in this journal. But now I'm saying instead of calling it as a balancing figure, let us actually calculate 180, all right, which we actually did as well, right? Like we calculated 180 before I came onto this sheet. I actually calculated 180 as the loss, right? Let us calculate 180 and then debit loss on sale to the tune of 180 and credit investment to the tune of 180. Similarly, this could be a profit also. In that case, the first journal doesn't change. It will continue to be bank account debit to investments to the tune of sale proceeds. And then the second journal would have been investment debit to profit or loss to profit on sale. The second journal would have then been investment debit to profit on sale. Over here, it is loss on sale debit to investment. If it would have been a profit, it would have been investment debit to profit on sale. The net impact, if you see, of both the journals is actually the same. Bank over here was debited by 102. Bank over here is also debited by 102. Loss was debited by 80. Loss 180. Loss over here is also being debited by 180. Investment at 3,000. Over here also investment is being credited together in both the journals put together at 1,03,000. All right. If it would have been profit also, it would have been the same. Now it would have been done in the same way. Now let us actually recognize these two journals in the ledger. All right. Let us recognize these two journals. All right. When we are preparing the ledger, we're not going to do that one entry approach. We're going to do this two entries approach. All right. So first I will, in the investment account, I will credit investment account by the sale proceeds. All right. I will be crediting investment account. I will be crediting investment to by the say I'll be crediting investment account to the tune of sale proceeds. All right. So in the investment ledger on 30th September 2023, I will write by bank account and in brackets just for the sake of clarity, I'm writing by sale proceeds. I am going to recognize 102,820. All right. I will be recognizing sale proceeds 102,820. If this would have been 105, I would have written 105. If this would have been 107, I would have written 107. I am not bothered about the carrying value at this point. I'm not bothered about the carrying value at this particular point. Okay. And obviously in the nominal value also, I will write down 1 lakh because I have actually sold debentures whose nominal value is 1 lakh. All right. When I sold debentures, I sold debentures whose nominal value is 1 lakh rupees, and therefore I'm crediting nominal value column also over here. All right. Now, after this, I am going to separately outside calculate what is the profit or loss. I'm going to calculate what is the profit or loss. My book value is equal to 1,03,000. I will look at the ledger and I will say that the book value was 1,03,000. The sales proceeds is equal to 102,820, and therefore I have a loss. Pardon my handwriting. I have a loss of 180 rupees. All right, that is what we actually did over here also, right? I calculated the loss of 180, and since it is a loss, all right, since it is a loss, the entry is loss debit to investments, right? Loss, which is an expense, I debited, and investment, I'm reducing the value of investment. That is why it is a loss, and therefore I'm crediting investment. So I have an additional entry, which is on 30th of September 2023. I write by loss account, by loss on sale of investments account, I will write 180, nothing in the nominal value, nothing in the interest column as well. And then if I actually take the totals, my ledger will then be tallied. My ledger is then going to be I'm going to have equal amounts on both debit and on the credit side. And this 3,000 interest income will be transferred to P&L account. Just like how in the last year, I transferred it to the P&L account. This year also on 31st of March, this won't get transferred to P&L on 30th September, my dear friends. Although I've sold the investment on 30th September, the interest income will be transferred to P&L only at the end of the year. Only at the end of the year. So therefore, on 31st of March 2023, I'm going to actually transfer it to the P&L account. And in that way, I'm going to have both the debit and the credit side equal in the second financial year, in financial year 23-24 as well. All right. So I'm just repeating myself. The only change that we did was over here, I am actually not recognizing one journal entry like how we actually learned in the previous session. I am breaking it down into two. I'm writing bank account debit to investment to the tune of sale proceeds. Then I'm actually going to do a calculation outside the ledger. I will be preparing a working note and I will calculate what is the profit or loss on sale of investments. After having calculated that, if it is a loss, it will come on the credit side. If it is a profit, it would have come on the debit side. All right. If it would have been a profit, the journal entry would have been investment debit to profit on sale of investment, right? The journal entry would have been investment debit to profit on sale of investment, and that I would be recognizing on the debit side. All right, just for the sake of maybe your clarity, what you guys can do is assume that this is sold for 105,000. All right, 100 or maybe let me just actually do it immediately. Say this is sold for 105,000. All right. The cost in my books, or cost rather book value, is equal to 103,000. All right. When I utter the word cost, what I'm trying to refer to is book value, guys. All right. Because the original cost was actually 109. All right. The original cost was 109. We then brought it down to 103. All right. So here I have got gain is equal to 2,000. All right. I've got gain is equal to 2,000. If you were following that one entry approach, your entry would have been bank account debit 105 to investments at book value 103, and to profit you would have had 2,000. All right. Alternatively, what you could do is it will be bank account debit 105 to investments 105. Okay. And then you will have a second journal where you debit investments and credit profit on sale to the tune of 2,000. If you look at it on a net basis, investment has been credit. The net basis investment has been credited by 103,000. Over here also investment was credited by 103,000. And then profit over here was credited by 2. Profit over here is also being credited by 2. bank was debited by 105, bank was debited by 105. All right. So when you're preparing the investment ledger, on the credit side, you will recognize by bank account entire sale proceeds. You will recognize entire sale proceeds without considering what is the book. On the debit side, you will have an additional entry to profit on sale, where you're actually calculating to gain on sale of investment. You will have 2000, and the ledger again will automatically tally, and you will have a carried forward balance or carried down balance of 0. Once you sell off the investment, you're not going to have any carried down balance for the next financial year. All right. So that is how we're actually going to prepare the investment ledger account. But I made one thing very, very simple for you guys. I assumed that we are purchasing the investment or after the coupon date has been paid. All right. The coupon would have already been paid to someone else on 31st of March 2022. I am purchasing it right after the coupon date was over, and I am selling it after I received the coupon. All right. So what have I done? For the sake of convenience, I have made an assumption that we are buying and we are selling on coupon dates. All right. I have 31st March 2022. Somebody else would have received the coupon, and then I am buying it from him. 30th of September, I've assumed that I have received the coupon fully, and after that, I am actually selling the investment. All right. Now, what can happen if I am buying the investment, say on 1st May, 1st June? What can happen if I sell the investment on 31st of August? I'm selling it on 31st of December, 30th of November. All right, then it's going to slightly get a little complicated, and we are actually going to look at that as well. Point number two, over here, I've assumed that we have purchased and we have sold. The only next transaction is actually a sale transaction, right? But what if I'm purchasing, then there is a partial sale, which means I'm selling, say, 200 debentures, or where I'm saying, say I purchased 1,000 shares on 1,000 debentures on one day, I'm purchasing 200 debentures on the next day, 500 debentures on the third day, and then I'm selling it on a piecemeal basis. So complications can get added in that way, and we'll deal with all those complications. All right, but that's it for this lecture. I hope you guys have understood. All right, bye-bye. Thank you.